Hey.
Excellent. Well, I appreciate you guys taking a few minutes today. We won't be long. I just wanted to put together some information on title insurance. I had a couple agents ask me over the last couple of months. They say, we get closer to closing, and my clients ask me every now and then, should I do this owner's title insurance thing, and what is it? And so I just wanted to go over some high level stuff just in case anybody has any questions. Just so you know, too, we have attorney Jim Shanley joining us on the call as well. So any title insurance questions that you have for Jim, feel free to reach out also. So in no particular order here, bear with me. I got to change my screen a little so I can read. Um, let's see here. All right. So two different types of title insurance. You've got your lender's policy and you have your owner's policy. Little bit of a difference on each of them. So the first one, the lender's easily enough, it's required by lenders to protect their investment in the property. So if somebody has a mortgage, the lender, the bank, they need to know that they're protected in case of a title flaw. It's going to cover issues like undisclosed liens, errors in public records, or fraudulent claims that could threaten the lender's ability to enforce the mortgage. So they just have to know that, God forbid, they have to step in and take ownership of that property for one reason or another. They've got clean title on the property so that they can do so. And again, this one here, the lender's policy only protects the lender. It does not protect the buyer. We'll get to that in a minute. All right, so some of the things that lenders policy title examples. One thing that, and we heard from Eileen Duff a few weeks ago on this when she was in the office. One of the most common things is forgery or fraud. So, fraudulent deed is recorded and someone falsely sells a property that they don't actually own. Later, the rightful owner claims the property, but the lender's policy ensures that the loan is still protected. So, a little bit crazy and frightening to hear her talk a couple weeks ago about how much this is actually happening with fraudulent deeds that are being forged. Another popular one would be undiscovered lien. So, a previous owner had unpaid contractor bills, and a lien is placed on the home after the sale. The lender's policy ensures that the mortgage remains enforceable. So that's another big one with mechanics liens and things of that nature that get filed either before or after the property is conveyed. So I found a few of these on ChatGPT. Some strange title issues that have happened over the years. First one, the pool that wasn't theirs. A homeowner happily enjoys their in-ground pool for years till a neighbor produces a decades-old survey showing the pool is actually on their property. The neighbor demands removal, but title insurance steps in to cover the legal battle and the relocation costs. Um, Another one, and I've actually seen this one before. These next two I've actually seen before over the years, the driveway disaster. Couple buys their dream home only to later discover that the driveway actually belongs to the neighbor. The best part, the neighbor decides to start charging them rent to use it. So thankfully, this would be a case where title insurance would cover the legal costs to settle this mess. I've actually seen this happen with you never really know how these things happen, but survey that just was done incorrectly or wasn't done at all. Client moved into the house and realized that part of their part of their driveway was actually owned by the couple that lived behind them. So the last one here, the street that wasn't theirs, a homeowner learns that the public road leading to their house is actually privately owned by someone who wants to start charging tolls. And that would be a case where title insurance would step in to negotiate access rights or compensation. So again, I did see something like this up in New Hampshire where a client, got to closing, didn't realize that the road that they had to take to get to their house was actually not public. It was private. Didn't end up being a big issue, but something that I think most people would want to know before they purchase a home. So one of the questions that comes up on the lender side of things and what clients will typically see on their loan estimate from a lender like ourselves, how much does this title insurance actually cost? And the answer is it depends on the loan amount. So the higher the loan amount, the higher the cost of the title insurance. So on a purchase, it's typically going to cost $2.50 per $1,000 of the loan amount. So as you can see here, on a $400,000 mortgage, the lender's title insurance policy is $1,000. So this is one of those spots when somebody asks you the generic question, well, how much are closing costs? One of the things we have to go back and ask is, well, what's your loan size? If you're only borrowing $200,000, your closing costs will be a lot less than if you're borrowing $800,000. And one of the reasons is the title insurance, because you can see this will be based on the loan amount. Now, as we get into a market where people are starting to refinance, the title insurance is redone for a refinance, but it's typically done at a reduced rate of about a buck 50 per thousand for a refinance transaction. Um, Jim, do you want to give any insight on that and kind of why that is? I mean, you don't really have to do a full title search on a refinance, correct?
Correct. Yeah. So you're basically going off of a one owner search. So you're not, you're, your thought is everything previous to that owner is already taken care of. So there wouldn't be any issues. So that's why they're able to reduce it
Okay. Now,
for
so if you're
that.
doing a
Yeah.
refi, do you have to go back to, can you use whatever insurance company you want, or do you have to go back to the original place that did the original policy?
You can, you can go with anybody you want because you're going to, a lot of times, borrowers are refinancing with a different company.
Yep.
So they're going to use whoever they want to use for that purpose. Yeah.
Perfect. Well, hopefully we start seeing some of those soon. All right, couple quick questions for you. So, Jim, you can't answer this one. In order to certify title to a property in Massachusetts, how many years back must they research the title in Massachusetts? Anybody know the answer to that one?
50,
50. Excellent. Good work. How about New Hampshire?
2 months.
2 months. I actually had to look this one up because little fun fact about me, before I got into mortgages back in 1999, I actually was a title examiner. So I did title exams through college and I did them everywhere, Massachusetts, New Hampshire, Rhode Island. So I actually thought New Hampshire was 35 years, but it's actually 40. So they have to go backwards for the last 40 years in New Hampshire to certify the title.
Now, if it's only one owner, how many years then do you go back? Is it another 50?
I think it's just the 50 in Massachusetts and 40 in New Hampshire. But the thing here too is, so when title insurance comes up and when clients ask about it, when we're talking about it, one of the things that they'll always say is, and I'll give them an explanation of usually what the owner's title insurance is because it's optional, and say, here's why I would recommend it. They always come back and say, well, you know what? The house is only 11 years old. So why would I need owner's title insurance? And I tell them you're not just covering the 11 years since somebody physically owns the property, you're still covering the whole 50. So you could actually be a little bit more risk because you have to cover back to when that was a piece of land or when it was subdivided. So if anything was done incorrectly when they subdivided or permits were missed or anything like that, you may be more risk for a title problem than some house that's been sitting there for 100 years.
You also have to worry about probate too. If something was not done properly with probate um, in the line, that could come back to haunt you as well. So that's why it's always good to get it.
Yep, absolutely.
Now, I know that you're covered for they do a 50-year look back, but are you covered for the period of time prior to the 50 years as well?
I don't know on that. Jim, any thoughts on that?
My understanding, it just covers that 50-year period
Yeah,
because in cases, because it's um, anything that's going to come up, if it's beyond 50 years, then it's no longer valid in a lot of cases, depending
yeah.
on certain liens and such. So that's why they only go back 50 years.
So I think it would be good at this point too to take a quick second and just realize that. So when we talk about title insurance, a lot of the things that we don't necessarily see behind the scenes, and Jim can speak to this, would be, you know, when they get that title report back, not often, but from time to time, there are questions on there that the attorney's office has to run by the title insurance company. So they're, like I'm running the application by an underwriter. A lot of times the attorney's office is actually running this title report, by an underwriter at the title insurance company to see if they can issue title insurance or if there's any problems. So, that's one of those things that as the mortgage officer and as the realtors, we don't necessarily see that happening behind the scenes, but it's pretty frequent, Jim, wouldn't you say?
Oh, I mean, most cases we will always send it to an underwriter just to make sure everything's in order because you can have an REO where there's issues with the power of attorney that was used. We just had one with that where it wasn't signed properly.
Yeah.
Um,
Yeah.
the underwriter caught that. Again, it could be a probate issue where heirs were left off of the probate documents and they technically still have a claim to the property. So yeah, we always run it by an underwriter um, to make sure we're not missing anything and that the property is insurable.
What
And
what
that
are
if there
some of
are
the
any,
what are some of the smaller things that you see like on a day-to-day basis? Like I mean, obviously somebody getting missed in probate, that's a huge one. But little things like, do you still see things like we've got an old mortgage on the title from 12 years ago and it's some bank that it no longer exists. Like how do we get a discharge? Do you still see things like that that need to be cleaned
oh
up?
yeah, all the time. And we had one where we had to go back to the bank who purchased the previous bank, and they had to do research, and it took about 2 to 3 weeks to get the discharge. And then it's just, I mean, it's simply in most cases it's a pretty straightforward thing where you just have to get the discharge and record it, depending on if it's land court or not. Land court
Mhm.
always complicates things, but you'll see that all the time. Or you might have a missed assignment in some cases where it wasn't properly assigned to the new lender. And that usually happens with REOs. You'll see something like that, and you have to get an amended assignment in there to correct it before you can move forward with the um, purchase. Yep.
And I think it's amazing a lot of this stuff, and I think we speak to this in one of the upcoming slides, is a lot of these title issues just arrive from clerical errors. You
Yes.
might have a missing discharge, and it might have been, if it was from 12 years ago, it might have been sent to the Registry of Deeds, but if there's a typo on the person's last name, or there's a missing middle initial, it could end up in some
Hi,
completely different
I'm
classification.
good. How are you, Irma?
All right, anybody have any questions on this? We'll skip forward to the next one.
Ray, I have one question. I'm not sure if you're going to cover it in a later slide. Um, are you going to talk about the difference between insurable and marketable title?
I didn't have that on there, but we can certainly try to touch on it for sure. All right, so switching over to the owner's title insurance. So, fairly similar stuff. If this was going to protect the homeowner, though, this has nothing to do with the lender. So it's going to protect the home buyer from title defects, owner disputes, hidden claims that arrive after closing, and it's going to provide legal defense and cover financial loss due to title issues. So, an example, like Jim said, years after buying, a long lost heir claims ownership of the property. An owner's policy covers the legal costs and potential financial loss. That stuff, not that it's frequent, but you do see that from time to time. I remember back in my title search days, I had a title search that I did where something like this popped up. Property in East Boston. I think it was an old three-decker that was just generation to generation passed down. So the one of the parents passed down, left it to, I think it was like 8 kids and 13 or 14 grandkids. So you had all of these people that had to be found and signed to be able to sign off on the title to the property. And a couple of them, nobody had been in touch with. So something like that, you can see these things with anything to do with probate, like Jim said, can sometimes, delay closings. So why this owner's title insurance matters is even with a thorough title search, hidden issues can certainly arise. Title insurance offers peace of mind by ensuring both the lender and the buyer are financially protected. Some of the most common things that you're going to see for title mistakes, like we just talked about, clerical errors. Through no fault of anybody, these important documents get mislabeled at the Registry of Deeds, whether they have a misspelling on a name or a missed middle initial. If they get filed incorrectly, a title examiner is never going to see them on the title search when they go back for the last 50 years. One of the things that's a little bit less common, but certainly severe, is any undiscovered easements. So, for example, after you purchase a home, the owner learns that the property has an unrecorded utility easement that limits their ability to build a pool or expand the home. That might be a case where title insurance would help provide for protection for the loss of the property value. One of the ones that we always think about, number 3, property boundary disputes. A neighbor claims part of the new homeowner's yard actually belongs to them due to an incorrect survey. So that might be a case where owner's title insurance would come in, maybe help out with a new survey and rectify whatever situation they have there. And then the last one would be any unpaid property taxes. So we all know that, the attorneys require, especially in Massachusetts, to get a municipal lien certificate to make sure that there's no unpaid taxes from the seller who's selling the house. But if something like that happens to slip by and nobody catches it, another example where the homeowner could call on their title insurance to take care of that unexpected cost. So now the cost of the owner's title insurance, and again, this is completely optional. I always recommend people take it. I'm sure Jim would recommend the same. I often try to remind people at least a week before closing to have them reach out to the closing attorney's office and have a discussion about it with the attorney if they would like. So the cost of the owner's title insurance will differ, because the thing you have to remember here now is that for the homeowner, they're protecting the amount of equity that they have in the property. So as you'll see in the example below, you have a $500,000 purchase and the client puts 5% down. So they're only protecting that $25,000 of equity that they have. So their owner's policy would be about $987. You have that same purchase price, somebody puts 50% down. Now they have $250,000 worth of equity to protect. Their owner's policy would be closer to $1,550. So it's just important to know that that number changes. And that's why, especially when you have these, $1 million, $1.5 million purchases and somebody's only financing 300,000 or 400,000, we always want to make sure we go over with them, because the cost of their title insurance for the owner's portion is probably a bigger number than they're used to seeing on previous transactions. Most cases, it's recommended that you purchase the owner's title insurance policy at the time of closing. Jim, do you want to chime in here as to why it's important for cost wise to do it in conjunction with the lender's portion?
Because the equity is lower at that stage. If you wait, your equity is going to go up, and the cost of the insurance is going to go up.
Yep. So it can be purchased later on, but it's always
Yeah.
most advantageous to do it at the time of closing, because someone like Jim's office, they're gonna do the policy through the same company, so they're gonna get reduced rates when let's say if a Fidelity or a First American or whoever the title company is behind the scenes, if they're getting both the lender's policy and the owner's policy, there's going to be a discount for the owner's policy because they're doing it simultaneously.
And it's
And Jim,
wrapped up into the closing costs too, so it doesn't hurt as much for the
yep.
buyers.
And I
So,
think so let's say somebody owns a property, they didn't purchase the owner's title insurance. 2 years down the road, they go, geez, this should be something I should really have. They come back and want to do it. I'm sure the cost is now more as well, because the title company is going to have to look at the title for the last 2 years also, that gap that they want to fill. All right. I think that is
Greg, can I
everything
ask
that,
a question?
yeah, sure.
If your equity in the property grows because of market conditions or whatever, does title insurance cover the additional equity? If, for example, you should have an issue that is more than the original equity protected?
Jim, any thoughts on that one?
I don't know the answer to that.
Yeah.
There's always, I know when people refinance, they're always given the option of buying another owner's policy if they
Yeah.
want. And my assumption is it's only going to cover the original equity.
Okay. Yeah, that's a good question, Liz. I haven't thought of that. Yeah, because I think we're so focused on what the cost is and what's happening for the
Yeah.
time that they're purchasing the house. But that's a good question. What happens years down the road?
Thank you.
Thank you. Anybody have any other questions? Anything that you'd want to share? Scott, if you want to re-ask your question, I don't know the answer to your question, but maybe Jim would have some insight on that.
Yeah, so
You want marketable title?
Yeah.
right. I've seen it mostly with like bank-owned or REO properties where
Yeah.
they may say we can provide insurable but not marketable title.
Yeah, so marketable title essentially is title with no defects whatsoever. There's no issues if you've gone through the search, underwriters looked at it, and there are no potential issues whatsoever. Um, in, Insurable title is the insurance company sees that there might be cloud on the title. They assess the risk and say, even though there might be an issue, we're willing to insure it and take that risk on. And then it becomes they're now responsible for that defect as well. They might put exceptions in the policy too, just to get it insured as well. But marketable essentially is everything's good on it. There's no defects, there's no title issues, no liens that are not going to be satisfied at closing. And then insurable is there could be a risk, but we're willing to accept that risk and insure it anyways.
Can you ever go from insurable to marketable?
Sure. I mean, there could be a way of correcting the issues. One of the issues could be you've owned the property long enough, or the next time that particular issue might be 45 years back. But then all of a sudden, you've now owned the house and that issue now is back 51 years. So now you're going to do a title search going back 50 years. That's not going to appear anymore. Now it's marketable in that respect. It could be a defect on a discharge that was not recorded. So they're willing to insure the property, and then it could be as long as we get the discharge at some point. Or they'll get an affidavit from an attorney saying that the loan was paid off, and as long as that's recorded, then we're willing to insure it as well.
Great, thank you.
Awesome. Good. Jim, any good title stories that title nightmares that come to mind?
Not a lot, but we've had the issue where you do the survey or you get the plot plan, and a lot of times you'll see a shed that's on someone else's property.
Yeah.
Yeah. And so now you've got to deal with that. Go to the seller's attorney and say, hey, this has either got to be moved or, either moved over to be on the property completely or taken down. We see that all the time. You might also have issues with nowadays, it's with especially during COVID, you had people building sheds in the backyard with power and with plumbing.
Yeah.
And they decided not to go through the town to get the proper permits. And now you've got an issue with that as well, with permitting. And either they got to remove it or they got to go get the proper licensing and permits to correct the issue. We see that all the time too. And it'll probably pop up more with the new regulations about, dwellings.
Absolutely. Good.
Yep.
I had a buddy of mine who's a closing attorney. Talked to him a few weeks ago, and he had one recently where, so, if you've ever seen a mortgage recorded at the registry of deeds, it's 14, 17 pages, whatever it might be. The very last page is always the exhibit A. It's supposed to talk about, the boundary of the land that you actually own. So like everybody, these clients through COVID, they refinanced once, they refinanced twice, they refinanced 3 times. So somewhere along the way, some paralegal probably got sloppy. And what they did is they didn't realize when they took the exhibit A from that property, it wasn't the exhibit A from the actual land itself. It was exhibit A from a small little sliver of land that the people had purchased about 10 years ago from their neighbor. So when the property got conveyed, that exhibit A for the little sliver of land is what was the meets and bounds. That's what was put on the deed somehow. So people went to sell a couple of years later and realized, wait a minute, like I've never actually owned the land that my house is on. All I've actually owned is this little sliver of land. So crazy that something like that could get by numerous sets of eyes to reach a closing table. But that's the kind of crazy stuff that you see when you see these really severe title problems. Thank God that one there, they were able to fix it. But anytime a title problem like that pops up, if you're talking about needing any help from a seller that sold a couple of years ago, you just have to hope that they're going to be willing to help you out, that they're alive. So it can really when these things pop up, they can really be pretty severe. So knock on wood, we won't see any of these anytime soon. So anybody have any other questions for Jim while we have him here, or anything in general?
The only thing that I would say, since Jim is still here, is don't forget that you all have access to a free preliminary title search for any client that you're working with, whether that's on the buy side or the sell side. So through Titlearity, which is, our title company, all you have to do is go out to titlearity.com, and there is a tab out there that says preliminary title search, and just give them the information that's required to fill in I think it's pretty much address, and give them, at least 24, if not 48, good 48 hours to turn it around. But I've seen some of these things come back where there's been many mortgages that haven't been discharged, right? So people will come into me like as if I know what is like, what do you want me to do about it? But they come into me and they go, I just did this preliminary, you told me to do a preliminary title search, and look at this, like this is still open, this is still open. It's like, what do I do? It's like, well, does your seller have an attorney, or call Jim? They can help you, figure this out. But this is the company that's doing it. It's, and Jim, I'm not sure if you're actually doing it or who's doing those title searches, but this is the resource that Jim is connected to
Yeah,
be
we
able
have
to
we have a
help
title
you guys
team.
out. Yeah.
Yeah, we have a title team that gets the email from Titlearity and will conduct the search and then provide that search to you, so you have an idea of
Right.
what you're getting yourself into on each property.
I mean, yeah, exactly. I mean, you look really smart. But I guess it's a case by case basis, going in for a listing appointment, right? Or being able to bring in information to a listing appointment to go, I don't know if you're aware of this, but this or this, and right, this is what I'm seeing. And then on the buy side, right, before you even, get into the offer and such, you're going to see if there's anything. And again, it's a preliminary search. It's not going to go back, right? It doesn't go back like 50 to what? Like, what exactly does it do? Do you know?
I mean, it can be a full search
It
to
can
see
be,
back,
okay.
because it can be but it's preliminary in the sense that
Yep,
we might not catch everything. We're catching the big issues that might arise
yep, yeah.
um,
Okay,
on
so
that.
that's, yeah, all right,
Yep.
cool. It's a great service and we appreciate
Yep.
it. And it's free to you guys. So titlearity.com is your friend.
Yeah, that's a
And
good
that's,
call, because I think, especially like you said, Kat, if you do it for a listing, or if you're trying to, do a net sheet for a seller, and you
yes,
kind of go, hey, we did a preliminary search of your title, and it looks like there's 3 mortgages out there. And they come back and they say, well, wait a minute, I just have a first and a home equity line. So right away that you want to get on top of chasing that missing discharge for that third
And
mortgage. So
a lot of those third ones they've actually done a new home equity line of credit, and that the original one has not been discharged.
Yep,
That's usually what happens. Yeah.
yep. So
I
kind
had
of an,
kind of a crazy scenario I wanted to run by Jim and see what his thoughts were on it. There was a property that I had written an offer on for one of my past clients. And when I looked up the property owner, I noticed that there was a tax taking of the property for non-payment of taxes. And we asked the owner if they had settled that and resolved it, because we didn't see anything that was recorded saying otherwise. And they just kept saying to us, don't worry about it, it's all set. Well, I'm no idiot. I'm not just going to take their word for it. I guess
Yeah.
my question to you, Jim, is if I see that, is that a simple fix as a matter of just repaying the debt, or is this a legal process that,
And if it's just tax taking, it's repaying the debt. If the rules have changed significantly over this past year in terms of tax taking, so it's a lot harder to physically take the property. Because the tax taking basically says the town has, it is essentially putting a lien on the property for the taxes. And they can move down the line to seize the property or take ownership of it. But they have to go through land court. In a lot of cases, it's just paying the taxes. And you can call the town and they'll tell you what is owed on that property at certain times. And then the MLC will clear that up as well. So we know exactly what
we
you
did
know,
that and they said the payment had not been received yet?
right. That's exactly it. That's why the MLC is so important to get that. Yeah.
And
That's
I
good
think
to know. So it's not a long process. It could just be simply, could
Yeah,
it be
it could just
repaid
be
with the
saved,
equity?
we're gonna put it on the CD, it's gonna be something that's gonna be paid at closing. And then it can be done that way, yeah. We have those, you see them all the time. Um, Especially with people who have estates where the property has just sat there for years and no one's been paying the taxes, and now someone's wants to now sell the property. And you'll see a tax taking on it. And you contact the town, you get the MLC and you see where things stand at that stage. And then in most cases, the town has not physically seized the property and you can move forward with it. Yeah.
Good to know. Thank you.
Yeah.
And it seems like, going back to my title days, we used to see those all the time too, Jim. But it sounds,
Yeah.
and I think this is a case where it's city by city or town by town. But that tax taking goes on record. It could be taken care of. They're quick to put it on record, but they're not always quick to show the redemption. They're less
Exactly.
concerned with that.
Exactly.
They're concerned about getting on the title, but when I remember back in my title days, somebody who clearly is not great with their bills or whatever, you might see 2, 3, 4 tax takings, and they're all cleared up, but the city or town, depending on who's, they might do those redemptions like once a year or once every 2 years.
Right.
So it wasn't
Right.
uncommon to have to chase those things either.
Right. Right.
Awesome. Anybody have any other questions before we wrap up? Great. Well, I appreciate you coming on, Jim. This was super helpful. And next week, same time, 11 o'clock, our topic is going to be, we're going to talk about mortgage options for people who are retired. So I will go over a few things for a regular, what we would call forward mortgage, ways that they can qualify for that based on their retirement. And I'm actually going to have Mike Galatis come on. I think a lot of you guys know Mike Galatis from Fairway. He's only doing reverse mortgages these days. So I'm going to have him come on and talk about ways to do a reverse mortgage as a purchase. So if those topics are interesting, that's going to be the topic for next week at 11. And as always, if you guys need anything, just feel free to reach out to Kathy or I. We would be happy to help.
Thanks, everybody.
Awesome.
Thanks, guys. Have a
Thanks,
great
Frank.
week.
Yep.